On the Market, Ontario's real estate show.
What can you tell us about this first month in real estate?
It's been surprisingly busy. I mean, we saw a little bit of an uptick in December, and we figured that that momentum should carry us through into the winter and maybe even push the spring market up a bit into a late winter spring market. But it started right away. January 3rd, January 4th, our agents were busy, lots of deals happening, and things that have been sitting on the market for 6 months, 7 months, 8 months have started to move.
Now, on January 29th, the Bank of Canada lowered its key interest rate by a quarter of a percentage point, bringing it to 3%. How do you expect that rate cut to impact the market?
I think it's a step in the right direction. I think a lot of consumers, a lot of buyers and sellers were anticipating this move, so it wasn't a surprise by any means. However, it's a welcome change, even for people that have lines of credits and may want to borrow some money in order to get into an investment property or pre-construction. That change is a huge change compared to the rates that we were looking at about a year ago last year.
Okay, I want to talk about pre-construction in a moment, but let's talk about the current climate, the threat of a possible trade war with the United States. Do you think that that will have an impact on the market, on your clients? Do you think they're going to be a little bit more cautious?
I think they will be. I think we've learned from what's happened over the last couple of years that it's better to be cautious than to jump right into it. So we are going to see a little bit of a holdback, I think. However, the pent up demand that's been around for about 18 months will still continue to fuel the market. People still have to, move into the houses that they need in case they're growing or downsizing. And I think that's going to be where the market heads. Although people will be a little bit careful, they're not going to bite off more than they can chew. I think it's a welcome sign to see the market just explode right off the gate. And I think we're in for a pretty busy late winter, early spring market.
Well, that's what I was going to ask you. The next rate announcement from the Bank of Canada isn't expected until March. What do you think is going to happen between now and that time?
We're going to start to see cautious optimism. And with that, I think people are ready to make that jump into home ownership. We're also starting to see some renters possibly moving into home ownership as their leases come up. So there's a lot of demand for that starter price point. So anything under $900,000 or so right now is starting to move. Where we aren't seeing a lot of movement is the condo market. That seems to be pretty quiet right now, but we're anticipating that to really pick up by the end of the year. So it's still early for the condo market, but the attached homes, the semi-detached, the detached homes, they've really started to move over the last 3 or 4 weeks.
You talked about pre-construction. How is that segment of the condo market specifically?
Very quiet right now. There's a lot of deals being had out there if you are looking for pre-construction, but people have they've shied away from pre-construction just because the price points that were being asked weren't meeting up to appraisals that were coming in. And that really affected people. Again, with pre-construction, a lot of people will dip into their equity in their home. So a line of credit or a home equity loan in order to purchase that pre-construction. And when rates were really high, it was almost unaffordable to be able to carry that. It was a second mortgage, right? So people were shying away from pre-construction. And now I think they're going to start getting back at it. There's some pretty decent deals out there for pre-construction. And with the promise that the condo market will start to take off and will start to absorb some of that inventory, now it's going to make room for people to go out and buy these condos and be able to rent them out. There's a huge influx in condos on the rental market and even for sale right now because people just weren't able to make the rents meet their needs and be able to pay their mortgage. So they put it on the market.
And our first guest coming up, we'll talk specifically about the rental market. But if we're looking at the condo market, the last few years, it was an opportunity for folks to get into the market by purchasing a condo. Is that still the case?
It still is. However, we haven't, there's so much on the market for condos right now. If you're looking for a deal in real estate, that's where the deals are. And that's just because of saturation. So the first time buyers that are looking for a condo, they're able to get in at a really good price right now. And also, you're starting to see people that were renting. Now they're going to look at this opportunity and say, I was paying so much rent. This may be an opportunity for me to pay a little bit less or even the same that I'm paying in rent and be able to get into a home. There's a lot of incentives that have been out there over the last couple of months from CMHC, 30%, 30-year amortization. And also now you can go up to $1.5 million and not have to put 20% down. So those two incentives have been huge. People have been using those in order to lower their monthly payments and also to be able to put a little bit less than 20% down, because before, if you purchased anything over $1 million, you had to put 20% down. So that $500,000 shift is absolutely huge. And it's even bigger than a 0.25% interest rate drop, because that has allowed people to enter the market with less money.
So, when we're talking about the condo market specifically, and I know this is on the market, Ontario's real estate show, but let's focus specifically on Toronto, the GTHA. What is the average price of a condo, one bedroom in the GTHA at this time?
A one bedroom, again, it depends on if you're looking in the 905, the 519, or the 416. But if you're looking particular downtown, you're going to expect to pay between 750 and $900,000 for a one bedroom, depending on where it's located. In the 905, you could probably get away with about 650. In the Markham area and stuff like that. Some of the older condos, the newer ones, are selling for about $1,400 a square foot in the 905. But in Toronto, they're at almost $2,000 a square foot. So it's a huge difference. And then you've got the difference in what the charges are for parking spots and everything. So it's a lot more affordable outside of Toronto than it is within the city limits.
But there is a certain cachet about having a condo in 416. So you're paying a premium to be in that area code then.
You are, and a lot of people are going back to in-person work as well. So we've started to see them come back. They had moved out to Wasaga Beach, Barrie, Aurelia, and now they're starting to come back into the city. So if they've already purchased a house in the outlying areas, they're picking up a small condo in Toronto so they can work there. So we're starting to see a lot of that come back as well. And a lot of them are renting too, so that they can go back to the home that they purchased over the weekend. But, there's hybrid work and then a lot of in-person work now, and that's driving people back to the city.
The condo market was also an opportunity for maybe that investor, the small landlord, to take a step in that direction. Is that still a possibility for those people?
So that's a tricky question because it depends on the condo itself. There is still a lot of people that are underwater in terms of what they're collecting in rent and what they have to pay in terms of a mortgage. So if people are savvy, they're going to be evaluating what the return is on those condos. And this is why Ontario lost a lot of investors to Alberta. It was much cheaper and much more lucrative to go out to Alberta to buy condos in Calgary and now Edmonton, because they were picking them up for about $250,000 to $350,000. Renting those out for even $1,400 or $1,500, it makes a lot more sense than purchasing something here for $750,000 or $800,000 and only getting about $2,500 or $2,600 from it. So that's why we lost a lot of our investors to other provinces, because they were putting their money where the return was better.
Okay, so let's round out this portion of our conversation where we started. A look ahead to 2025. If you were to take a guess and talk about what the future looks like in terms of real estate for the next 6 or 8 months, how would you describe it?
I think we're going to see a lot of activity. We're going to see a lot of sellers coming back on the market. They may have taken their homes off the market, but they're going to re-enter the market. The buyers have already started to come out. So in that price point, which is under $900,000 right now for a home, whether it be a townhouse, a semi, a detached home, they're already getting multiple offers and people are getting priced out of that market. So now those are the people that are going to be jumping back into the condo market, because that initial segment for home ownership has been taken away from them in terms of homes. So that's how the market is going to go for the first time buyers. I think in the next couple of months, we're going to start to see the middle take off, and then maybe in 3 or 4 months the high end market will take off. But it all points to a very busy 2025. Conservatively speaking, even if we had a 10% increase in units sold, that would be huge, because last year was the second worst year over the last 10, 15, 20 years. So a 10% increase in units sold will be great, and I anticipate that pricing will continue to climb. So a lot of people were thinking, we'd have a lull and pricing would level off or maybe even drop, but we're going to see pricing increase by about 5 to 8% across Ontario.
Well, it's just about time to wrap things up on the market. Asif, last piece of advice for your clients who are listening right now, whether they're buyers or sellers.
I think for the sellers, we're starting to see a lot of traffic out there. So if you've been holding off, what you want to do is you want to get on the market before all the neighbors get on the market. So make sure your house is prepared, make sure it's ready, maybe over a family day weekend or so, and get it on the market, because you're going to be able to take advantage of the large number of buyers that are already out there. The buyers have already jumped off that fence and they're out shopping for deals. And if they do come across your house and it presents as the best house on the street, or shows the best on the street, you're probably going to end up with multiple bids on it. We're starting to see people hold back on offers now in terms of agents, and they are getting 3, 4, 5 offers. Nothing crazy. They're still able to maybe get a home inspection condition in or financing condition in, but you're going to start competing, and you're going to have to make sure that all of your mortgage details, everything is in place, because if you are competing, that's one way to win it, is to be prepared.
All right, so it sounds like a seller's market. Do you anticipate that properties will go over asking?
They're starting to go over asking now, and it really depends on how agents are pricing these. There's a lot of agents that will take the lazy way out and price at $200,000 or $300,000 under asking and or under value, and then say they got over asking. But the properties that are priced relatively at market value, they're selling for roughly around market value, maybe full price. We are seeing the odd home sell for 10, 20, 30,000 over. But when a home sells for $100,000 over, you really have to question the list price and see if it was the home that created that demand, or if it was a low list price to start with.
Those days, not that long ago, where homes were selling way over asking, I think it was just after the pandemic. Those days are gone?
Those days are gone. And I think people are going to be more cautious moving forward, because they don't want to get into a situation where we saw people were in last year, where they were forced to sell because of the decisions they made in that heated market. So I think people are going to be a little calmer. They're going to do more research. And I think the realtors are a little bit better now than they were. A lot of these realtors started in 2020, 2021. And I think the experience that they've had over the last couple of years with the down market really does help in helping them guide their clients properly.
On the Market, Ontario's real estate show.